Hello and welcome. You are joining us live on the Investor Lab, the home, the epicenter, the Taj Mahal for passionate people seeking a life of freedom, choice, and abundance.
Fair enough, man. Go hard. Go hard. Why not?
Why not?
Let's claim all of the
Alhambra.
massive, beautiful structures in the world, shall we?
Yeah, we're the Alhambra of prosperity here. By the way, I've got the YouTube chat there, Gabby. So if you could
Wonderful. I'll
me.
tell you all the things. Help me, please. Help me, please.
I'm excited that you're back, Gabby. I'm excited.
I'm back.
Hello.
Sorry,
I'm
now I'm triple tasking, man.
Yeah.
I got manned again.
You might need to turn your mic up a touch a little bit as well. If you're listening to us live, let us know if our audios are the same level, or if I just need to turn my earbuds
they look about the same to me. Yeah, maybe.
Okay,
turn your ears up.
Maybe it's
open your ear holes, man.
Well, it's like what my grandma used to say to my granddad all the time because he had hearing aids, and nice. he would turn his hearing aids off so he didn't have to listen to her. He'd just turn them off. He'd just turn them off so that he could like not listen to her. And she'd be like, "Turn your ears on."
That's so cute. Okay. Now I know it's ahead of me. That's good.
Yeah, totally.
Ooh.
Anyway, I'm sure that everyone's delighted that you're back because, whilst I'm sure last week's episode with Julian was scintillating. I think the general concept of having me rode this, it was wonky.
It's great. It was very wonky.
Yeah. Well, it was meant to be a little wonky, but I think that the general premise of not just having myself postulating ideas on this podcast is a really good idea. So I'm happy that you're back to bring balance back to the force, so to speak. But I'm so excited for today's episode. I'm so excited that I'm concerned that I can't talk about enough stuff.
I know. We were just talking about it in the kitchen. You're like, we need more time. We need more time. I need more time to work on this. I need more time to talk about this. There's so many things to talk about. Like we have 90 minutes. So
good luck. And can you try and keep us on track?
Great.
Awesome. And for those of you who are joining us live, great to see you. Great to see some friendly, familiar faces.
Hey, guys.
Love having you guys here. And if you're not joining us live, remember you can join us live every fortnight at midday Sydney time. And of course, if you're not joining us live, leave a comment below the video on YouTube. It helps YouTube, know that you like us or care enough to leave a comment. That's good. That helps us get this out to more people, which is really why we're doing this. That's why we talk about all kinds of random stuff on here, because we really want to help people. Our modus operandi is really to help as many people get on the right side of the ledger as possible, which is really what this episode is actually about, actually. Mm-hmm. And so as you listen to this and as we go through this, please help us help more people to get on the right side of the ledger in a rapidly changing world. And the way you can do that is by hitting the like button, hitting the subscribe button, or leaving a comment. All of those things make the YouTube gods happy, and they will distribute us yonder. Anyway, moving on.
To yonder. To yonder.
To yonder. Anyway, let's go. We have got, are you going to control the slides?
Oh, am I?
Well, I don't know. Let's work that out in a minute. Let's talk about what we're going to talk about.
You can talk. I'll do this.
We are going to be. Yeah, okay. I think that's better.
This is good. You can tell I've had like 2 months off this. This is good.
Periodically, I'm going to be like, no, wait. I need to show you something else. All right, let's get stuck into this.
You want to steer the slides.
Do I have the normal sharing capability? Because I need to be able to switch between.
Yep.
Like I did like last week.
Yeah, you should. Live TV. Okay, I'll do it tomorrow.
Oh, that's okay. We'll see how we go. Okay, so we are going to be talking today about the fact that we're in a K-shaped economy, we're going to talk about the AI chasm and why upward mobility has a closing window. And it's a very important topic. We're not going to spend all of our time on the slides because there's so much to talk about. And I want to talk about these ideas. The slides are here to help us illustrate a few points, but it is not the main, not everything is captured in these slides. But yes, Gabby.
Can I preface this before we get into the slides, please?
Please.
Just quickly. There is so much happening in the world right now. There's so much happening. There's a lot going on. There's a lot to process. There's a lot of change, technology, politics, everything happening in the world. Now is the time when people are likely to freeze and not do anything. And so a lot of this information, you can take it as information and just feel overwhelmed with it and choose to not act. That's not why we're doing this. Hopefully going through this episode, you'll say like, it's really the wrong time to freeze. It is the time that you need to take action. So if you have been sitting on the sidelines, I know that life is overwhelming for a lot of people right now. I know that it's hard to prioritize yourself and hard to prioritize like building wealth, but it's like now you really need to take it seriously because as we're going to paint, it's like we don't actually have a huge amount of time left in the way that the world has always worked in terms of wealth building. So I just want to set that up. It's like understanding that shit's overwhelming at the moment, but it's still like this is really important to take seriously now.
100%. And let's stay off the slides for a minute. Let's just talk about it. Let's talk about this concept because inequality is getting greater, right? There is more and more wealth inequality happening in today's society. The stuff we can show on the slides is going to illustrate those points. And broadly, as more inequality happens, people become. So the combination of widening inequality, wealth inequality, plus the incredible speed of change that we're all experiencing at the moment, and we're going to continue to experience. Some people are not even aware, but there are people who are not even aware of AI right now. But the world is changing at the fastest rate that it's ever changed. Yep. And these two things are colliding, and that can cause a lot of emotions to run pretty high. Now, as a couple who own an investment company, like literally a company that is designed to help people build wealth, it can become a very divisive topic where people sort of, have the idea that the rich are getting richer and the poor are getting poorer, which actually is true, right? And that can become a very emotionally divisive issue because people feel like it's not fair. And then so they have a tendency to want to attack people who are building wealth because they feel like it's not happening for them. And that may be true. Maybe it is not happening for them. And this division is causing a lot of very elevated emotions. It's a boilerplate topic where a lot of people are getting very aggravated. And there's a lot of, the kind of narratives around, property investing is bad and, building wealth is bad and, being wealthy is bad, I think is, firstly, highly misplaced. And also people don't understand the nature of how and why these kinds of things are happening. All they see is, okay, so rich person got richer and I did not. In fact, objectively speaking, I feel like I'm poorer, which is objectively true. And we can kind of illustrate that with some data in a moment. And so they necessarily think, well, okay, if it's a zero-sum game, that person took more and I got less. Therefore, we should, screw them, give me what's mine. And this kind of comes down to like sort of socialist and capitalist ideologies, not to get too political with it, but just to kind of, talk plainly about it. And frankly, growing up, I was very much on the kind of more socialist side of things. It was very much like, well, okay, I think there should be free education and free healthcare, and like people should be supported, and we should have a more egalitarian society. And fundamentally, I actually still believe that is true. I actually believe that wouldn't it be great if everyone had unlimited abundance and we could have everything we needed as we needed it without the need for unnecessary struggle, right? And then all value creation came from creative pursuits and passion rather than a need to strive against kind of like effectively a wage slavery type environment. I can believe that and also still be a passionate card-carrying capitalist, because guess what? The economic construct we live in does not support that socialist idea. It just does not. And that is fundamentally driven by the monetary structures we have, the economic structures we have, the incentive structures we have. And so you can not like it, and that is okay. And let me just say, I actually don't like it either. I actually don't like that the rich are getting richer and the poor are getting poorer and it's getting harder for people to get ahead. I actually don't like it. As someone whose job it is as a company to help people to build wealth, I don't like the fact that that has to be true. Like you should be able to do it if you want to do it, but you shouldn't feel like you need to do it in order to just keep your head afloat.
Yeah.
Right? I don't think that is good for our society. However, you can take two points of view on this. You can either, effectively stand on a beach and watch the tidal wave coming and start screaming at the tidal wave that it's not fair and hope that if you protest loudly enough, the tidal wave will just stop and not wash over the land. Or you can recognize that a tidal wave is coming and you can take your friends, family, and loved ones, the people you care about, and you can take them to higher ground. And if you really actually want to be able to create a scenario where the people you care about have all the things they need, then you need to stop abdicating responsibility to a government in order to do that for you. So the general kind of, and I'm using the term socialist, and hopefully that's not inflammatory, but just like in a general context, what I mean by socialist is the idea that, wealth is reasonably evenly distributed and, most people have access to the things that they need in a relatively egalitarian kind of fashion. Okay. I don't actually mean like, communist Russia or kind of like, some kind of extreme end of the spectrum, but just in the general context that, there's more equality, wealth equality. And so, a lot of people want these things and they don't actually, but they abdicate responsibility to a government and they say, well, okay, well, isn't it the government's responsibility to give me all this kind of stuff? The problem with that is the government then runs huge deficits. Those huge deficits then are required that they print more money. The printing of more money inflates the asset prices. And then the people who own the assets get richer and the people who don't own the assets get objectively poorer. And it actually perpetuates the system that they actually don't want. So that the way that they're trying to solve the problem actually creates more of the problem they're trying to escape. Which is just crazy because they can't see it. And in fact, if you actually wanted to exist in a society where the people you cared about had all of their needs taken care of, i.e. they had access to good food, good healthcare, good education, all of that kind of stuff, it starts with personal sovereignty. It starts with you saying, okay, the government is not going to do that for me. How do I do that for myself and for my family? And when I say sovereignty, I don't mean kind of, what I mean by that is you need to become the master and commander of your own personal little kingdom on earth, right? Your little slice of the pie, your little world, the thing that you can control. And if you're not happy with the economic distribution that's happening at a societal level, start creating it at home. They say charity starts at home, but also so does your own social social ideals. And so if you want your kids to be able to grow up in a world where they have access to the best education, the best healthcare, the best food, are you going to put your hand out to the government and say, please, can you sort this out for me? Or are you going to turn around and say, actually, I'm going to take responsibility for this. I'm going to build wealth and I'm going to make sure that they can grow up in that kind of an environment where they can have access to good food, good health, good shelter, good, all that kind of stuff. And so you get to become the king or queen of your own little sovereign, portion of this, time space continuum that we occupy by building wealth so that you can live the ideals that you purport to desire. Now, you may also turn around and say, okay, well, that's not what I would want for my family. And I'm going to build wealth. And in fact, I'm going to teach my kids that if they want anything, that they're going to have to work for it. And that could, fine. That's entirely your prerogative as an individual to think about how you want to raise your family. But all I'm saying is, the socialist ideals that people chase actually come on the other side of actually creating wealth. And so if we really want to create the most amount of benefit in our community and in our society and for the people that we care about the most, we have a moral obligation to build wealth. Because again, standing on the beach shouting at a tsunami coming towards you is not going to do anything. You're just going to get wiped out. And there is a better way. You can get to higher ground, you can build a boat, you can get out of there before you get run over. And that's what this is all about.
Cool.
Great. Soliloquy, Finn. Okay, so this is effectively what we're talking about today. We're talking about the fact that the wealth divide is widening, and we're talking about the fact that asset ownership is really the only way to get there. And in fact, it's going to get worse. It's going to get a lot worse, and it's going to get a lot worse a lot faster. So once upon a time, you were able to, and I'll sort of, great. Let's start there. In fact, maybe go to the next slide just to make this image a little bit bigger, because I think this image is a good way to illustrate the kind of core topic.
You've got the slides, my friend.
Oh, I've got the slides.
You've got the slides.
Okay, I'll go to the next slide. Okay, there we go.
Let's hang up.
So The K-shaped economy, people might have heard about a K-shaped economy. So what does that mean? That effectively means that there are some people who are on an upward economic trajectory and some people are on a downward economic trajectory. And we often call them the asset owners and the consumers, but also another way to think about it is the income class and the wealth class, right? Or is a very interesting way to kind of think about that. Now, in the past, it has been possible, and in fact, the further back you go, the more possible it was for you to move from the lower arm of the K to the upper arm of the K, and that's what's called upward mobility. So you may come from a lower socioeconomic demographic, and you may, by finding opportunities, you may elevate yourself from a lower socioeconomic positioning to a higher socioeconomic positioning. And this isn't about like classism and status and I don't care about Lambos and designer brands and stuff. It's really about like economic upward mobility. What is the potential and opportunity for someone to elevate themselves out of poverty into affluence? I think that's really important for people to be able to have that, because when you have a society that doesn't feel like that is possible for them, what do you get? Well, you get something like the French Revolution. You get guillotines, right? Because people go, I can't get from where I can't change my situation. Now, the way to get from a lower socioeconomic situation to a higher socioeconomic situation is effectively to find and exploit opportunities. So that's the simplest way that I could think about describing it. So you can do that through employment, you can do that through investment, you can do that a whole bunch of different ways. So for example, if you identified that there was so all value is derived ultimately from scarcity. Or scarcity and utility is probably a better way to think about it. So if you were able to identify a career choice where there was very few people and the work was very, very specialized, almost certainly that would be a higher paying. I'm sure there's exceptions to that. Like if you're like a mushroom color expert or something like that, it could be highly specialized and whatever. But there must be a demand side to it as well. But effectively, if you think about like why do CEOs get paid ostensibly quite a lot of money, it's ostensibly, we could debate this, ostensibly because there's very few people who can make decisions at that level. Why does a neurosurgeon get paid quite a lot of money? Because it's a highly specialized skill. It's hard to do. Very few people attain that. Therefore, you get rewarded accordingly. And so, to the degree that you are able to see a career path where you could specialize in something, develop capabilities, and deliver more value to either individuals or to a company, you are able to effectively gain higher and higher levels of income through your wages. And that's career progression. And that's why people would go study for 8 years, because they're like, on the other side of this, like I'm going to do an investment of studying for 8 years, studying medicine or whatever. And on the other side of this, I'm going to have a job that's going to pay me hundreds of thousands of dollars a year. And that wouldn't be the only reason to do it, of course, but the economic reason would be to do that. And then that's going to make it all worthwhile, because otherwise, why wouldn't you go do something else? Now, the other ways would be entrepreneurship. So an entrepreneurship would be to find an unmet need in the market and then fulfill that need. And to the degree that there are not many people solving that problem for that specific niche or that specific area, that's your opportunity. So if you were to start a Facebook ads agency back in 2010, or maybe I'm going to say 2010. Somebody who runs a Facebook ads agency is probably going to tell me that I'll get that wrong, but whatever. But let's say you started something back in 2010, or a digital marketing agency, 15 or 20 years ago, you probably would have you would have been able to charge a lot of money and capture a big market share. You look at someone like Neil Patel, his business does north of $100 million of revenue a year. Why? Because he was early. Like I don't know that he's a genius. He's not a genius. Like, I mean, I'm sure he's good at his work, but he was early, right? And he found the opportunity and he targeted that. If you start a digital marketing agency today, the competition is extremely fierce. So there's less opportunity there. Drop shipping, for example. The first few people who worked out drop shipping, they were able to print cash. They were like, what? I can find suppliers on Alibaba and bring it over to Australia and sell it for like 5 times what I paid for it. This is crazy. Like, this is awesome. But then lots of people start doing it and the opportunity gets diminished. The same thing goes in the stock market. Just one sec. So the same thing goes in the stock market. Like if you just look at the S&P 500, which is like an index of the top 500 US stocks, you would arguably say that broadly the S&P 500 is efficient. It's hard to exploit the S&P 500 because it's already an index of names. But if you wanted to look at all of the top 500 companies in the stock market, you may be able to find companies that you believe are underpriced relative to the opportunity, and then you can invest in those companies and you could make returns which far exceed the returns of the S&P 500. So your ability to find opportunity is your ability to create economic upward mobility. Now, the argument here, and I know you want to jump in a little bit, just give me 1 second. The argument that I'm making here, or that we're making here, is that AI is going to make that gap, that chasm, much harder to cross. So not only are the rich going to get richer and the poor going to get poorer, that is already happening, by the way. That's not an AI-driven thing. That's already happening. We'll show you some data around that. But actually, because of the significant advances in AI, the ability to exploit opportunities, i.e. to be able to develop a set of skills that is so unique and valuable that AI can't disrupt your position in the workforce, that you will be able to find underpriced stocks better than AI will be able to find underpriced stocks, or the fact that, everyone is going to be so enabled to be able to start a business that suddenly all opportunity gets saturated with people who want to start businesses to fulfill these needs. AI is going to make that gap from a lower socioeconomic position to a higher economic position, socioeconomic position, much harder than it's ever been before, because the opportunity is going to be soaked up by the exponential expansion of AI. And I think this is something that people aren't really considering, because we already have a K-shaped economy. It's already getting harder and harder and harder. And AI, the proliferation of AI, is going to create a huge chasm. Now, it's not going to make it impossible, right? It won't make it impossible. You will still be able to do it, but it's kind of like the K is getting wider. The gap's already getting wider. It's already getting harder. And then in the middle of that, there's going to be a huge chasm that you're going to need to be able to try and leap across. So it's going to get exponentially harder, which ultimately means that if you, and sorry, I'm waffling on a little bit here, but you can tell I'm excited by this topic. What that ultimately means is that unless you move yourself from the income class to the asset owner class, your ability to move from your current socioeconomic level to a better one is going to be severely inhibited. It doesn't mean it's going to be impossible, but effectively, you could be economically frozen at whatever your socioeconomic level is right now. You may not really be able to get any upward mobility in the future, because it's going to get progressively harder. And so if you want to make a change now, you've probably only got a few years. And I'm not trying to be fatalistic about this. I'm in the camp of what you would call an apocalyptimist, right? Which is, we could talk about that later. But it's gonna, like, this shit is happening. This shit is real, right? What? Apocalyptimist? You like that?
It's just like, I'm gonna get that on a t-shirt for you.
Oh, that'd be so good. Yes, please.
Yes, please.
So, but the thing is, this is happening, and so you really have a limited window of time to be able to get from one side to the other, and it's not going to come from your income. It is only going to happen, and we've got. I'm so excited about this. I can't even go through the slides because I'm so excited to talk about this, because there's so much that people need to understand about this. But and we'll validate all of this with some data in a moment. But your income is not going to help you get from where you are now to where you want to be. The only way that you can cross that chasm is through investing in assets. Now, there's lots of stuff you can invest in, and it's my passionate truth that I genuinely believe that Australian residential real estate is the best opportunity that is available to anyone on the planet right now, particularly if you're an Australian citizen and you can invest in it, right? Foreign investors are a bit different. And so you have an opportunity now to act now, and this is not something you can sit on. Anyway, I'm carrying on a little bit. So why don't you get a word in edgeways, Gabby?
I just wanted to kind of summarize, and I think you're right. Like, we could talk about this particular, just even the concept for the whole episode, but I wanted to try and summarize in the way that really clicked for me, particularly with this, like, learning about the K-shape, because I think anyone listening to this, anyone that's a human in the world, understands that there's always been, like, the rich getting richer, the poor getting poorer, right? That K-shape is not a new concept. And so it might be easy to listen to this and think, well, what's any different now? Because, like, there's always been the rich class, there's always been the poor class, there's always been different levels of exploitation within that. But what makes it any different now? And I think the word that you mentioned that really made it click for me is that word inefficiencies, because I think what people have traditionally done is they've identified inefficiencies. If you are kind of, in the lower income class, if you can identify an inefficiency, that is the kind of seed for entrepreneurship. It's the seed for growing business, and it's the seed to create this vehicle for a lot of people that historically have built a lot of wealth through business. And the thing that clicked for me is that AI is going to be the best inefficiency identifier, better than any human ever. And so the opportunities for people to build wealth through business in that traditional sense are rapidly disappearing, because AI is like finding those inefficiencies, it's solving those without humans. And so that's kind of where that AI chasm really made sense to me, because it's like traditionally people have been able to like build wealth through that, finding opportunities, finding inefficiencies, and creating something to help solve that, and moving themselves kind of upwards in this economy. But we're going to lose that opportunity to be able to do that in the traditional kind of business sense. So it's just, that's how it like landed. That's how it landed for me, that I was like, oh, okay, that's what makes this different. Obviously, a lot of people talking about AI now and the impact and how much everything is changing, but the impact on the economy and normal people, traditionally, like if you were in a situation 20 years ago and you were in a situation where you lost all of your money, or you were very like in a suboptimal financial position with your family, you could go, okay, who am I going to serve? What problem am I going to solve? Go and like try and find and identify specific inefficiency somewhere in the human existence, and then build a business around that. And that's how you would like build your wealth back up. But I don't think that's going to be around for much longer, unfortunately.
Yeah. So there's a quote: "In the land of the blind, the one-eyed man is king," right? And so the problem with that is, what happens if you go to that kingdom in the land of the blind where the one-eyed man is king, and then give everyone who's blind 2 eyes? Right? So that opportunity that has existed, everyone is going to be so enabled to do anything that the opportunity to find the inefficiencies and to, for lack of a better term, exploit them, which is effectively what you do with any opportunity, right? Is going to be diminished. And so is the economic opportunity. So yeah, like technically everyone can go do anything, but when everyone can do anything, then what's the value? Where does the value happen?
But the supply and demand is completely broken.
Yeah. Now, the interesting thing about that is GDP will probably accelerate at an extremely fast rate. And so, economic prosperity in aggregate at some like higher level is going to accelerate. The question is, where is that wealth going to accumulate? Who's going to get it? Where does it go? And so this is, let's actually start trying to make our way through some of the slides, and then we can sort of backfill some of the points as well.
Yeah.
So, and it's a really interesting point, right? So this slide here shows the gap between productivity and pay. And basically since 1975, roughly, or since about 1970, since about 1970, 1975, there's been a huge divergence between productivity and pay, which basically means as productivity has increased by 3.5 times more than typical worker pay since 1979. And so if what had happened since, say, 1948 to 1955, if wages had increased at the same rate as productivity, we wouldn't have wealth inequality. But what's actually happening is productivity is increasing, but wages are not increasing at the same rate, which means that capital is accruing somewhere, but it's not accruing for the income earners. And if we have a look at the Australian labour share of GDP versus corporate profit share, I think this is really interesting and telling as well, because this it's very easy to be demonize business and big business. They're making all these profits, right? As a business owner, I can tell you it's not all roses. Let me just put it that way. But the Australian labour share of GDP versus corporate profits, you can see that labour share of GDP fell 13 percentage points since 1975. Whereas corporate profits have actually gone up. Now, you might sit there and go, corporate profits, so that means that business owners are just getting rich and getting fat and all of that kind of stuff. But actually what's happening is most of those, this is based on publicly listed companies. And so that those profits get distributed to shareholders. And so actually the asset owners, the people that are holding assets, equities, are actually capturing more of the wealth than the income owners. The income, labor's share, so the income share of GDP has fell. So you're actually capturing less of the economic prosperity through your income, and corporate entities are capturing more of it. But then those corporate entities, that wealth is being distributed to the asset owners, to the shareholders. And so it's not just like these companies aren't owned by single individuals who are just, and there are definitely examples, Eugenia Reinhardt, your Twiggy Forrest, all of that kind of stuff, where these, tremendously wealthy individuals are getting, but they're at the extreme edge of the margin, right? But in practice, there are a lot of people who own, shares. And actually, let me share another tale. I just spun this up using AI in about 10 minutes, right? So something that should have taken quite a bit of time. Actually, I did this in about 10 minutes. So there was a study by, what's his name? Hendrik Bessenbinder. He studied all of the stocks in the US, all of the US public stocks between 1926 and 2019. So 26,168 public stocks. And he found that 4% of stocks created all of the wealth. Right. And because it's very easy to look at the previous slide and go, oh, great. So I just start a company then and I'll just capture more of the profits. Well, actually, 0.33% of all of the stocks listed between 1926 and 2019 created 50%, more than 50% of the wealth, 0.33%. Right. So 96% of all of the companies didn't actually do any better than just holding treasury bills. And so you can see here in this distribution chart, a very small minority captured most of the gains, and then a vast majority actually did nothing, or actually on average matched T-bills, which means that 96% of the stocks, half of them actually underperformed T-bills. So the distribution of wealth it's not evenly distributed. It's not as simple as like create a business, get rich. What you actually find is that the top, even over the last, say, 5 years, the top 2% of companies in the S&P 500 generated approximately 75% of all of the returns. So over the last 5 years, it was varied between 55% and 85% of all of the returns on any given year. So let's just very roughly say 75% of all of the returns in the S&P 500 were over the last 5 years were captured by 2% of the companies. And so what this also points to is that most companies, they're not wealth creation vehicles, right? They may generate some income over time, but most of those are legacy companies that have existed for a long period of time and are kind of like zombie companies that aren't really growing, that may produce just enough cash flow to keep investors holding the equities, and really nothing else genuinely happens. And really what we're pointing to here is again, the idea that owning assets is far more important than trying to raise your income. And in fact, even the concept of entrepreneurship shouldn't be seen through sort of rose-colored glasses of like, oh, I'll just go start a business, because AI is going to enable everyone to be able to solve whatever problem you think you're going to solve. And unless you have a truly, species-changing idea, which would put you on one end of the barbell, right? Because effectively you have a barbell of like a very small amount of companies capture most of the economic return, and a very large amount of companies capture almost no economic return. So unless you have now a species-defining concept, you are not going to really create transformational wealth. In fact, I was talking to, I was doing a bit of coaching with a business owner the other day who asked me for a little bit of help, and we were talking about their business. And a few years ago, they were talking to me about how they wanted to scale their company up, and they wanted to go, scale up. Talking to them last week, actually the conversation was very different. He was like, my business is not sellable. I'm like, it is not sellable. And he's like, and it's also not going to last forever. I said, no, your business has got about 3 to 5 years left. He said, yep. I said, great. So what are you going to do? Like over the next 3 to 5 years, let's treat this like a lifestyle business, right? And build don't try and grow it, right? Like try and make it more efficient and try and live a better life, right? But effectively, he's then going to take the cash that he's creating and then invest it in assets, because just trying to grow the company is actually not going to work in the kind of current environment. And do you want to move on to this point? Because I think this is pretty wild.
Yeah.
Okay. So this isn't a new thing either, right? And so this is we're going to be talking about some pretty crazy stuff in here. And I don't want people to think that this is like we're trying to be alarmist or, doomist or anything like that. What I'm actually trying to show is that there has been a problem that has been getting worse for a really long period of time. It's not like AI is coming tomorrow and all of a sudden everything's going to change. You've been living in a system which has been broken for a very long time. That's why you feel the way it feels. That's why you feel the way you feel. The reality is, though, it's going to get worse, not better. And so by showing you this, what I'm trying to highlight through all of these slides is that this is a problem that's been getting worse for decades. You've got to do something about it now because it's going to get exponentially harder over the next few years. And so you have a small window of opportunity to make a tremendous amount of change for you and your family. But please don't take that as being alarmist. There is an opportunity here, and I want people to feel empowered and to understand the situation they're in so they can do something about it, right? There's like, we can see that the tidal wave is coming. We can pick ourselves up off the beach and run to higher ground. But imagine if we just left everyone standing on the beach. If we knew a tidal wave was coming and we didn't say anything to anybody else and we didn't give people, because I actually, by the way, I keep looking out the window because we are obviously in Thailand, and Thailand did have a tsunami quite a while ago now. And I actually knew someone who was standing on the beach when the tsunami was coming in. And they said that they were so transfixed because they saw the water going out. And it was so bizarre to see the water going out so far that everyone was kind of mesmerized. They were just standing on the beach, staring, watching the water going out, going, something doesn't feel right. She said it was such an eerie feeling. Everyone went silent and everyone was just standing there watching the water get sucked out. And they were just so mesmerized in this kind of cacophony or this kind of like catatonic state. And she said the thing that woke her up is she saw a boat fall over. There was a boat that was out in the water, but all the water suddenly had gone out from underneath it and it went onto its keel and then tipped over on its side. And that snapped her out of her kind of like hypnosis. And she went, oh shit, something is wrong. And she turned around and started running. And then her and her friend managed to run far enough and basically climb up a cliff face and hang on to the side of a cliff whilst water was hitting them in the back of the legs. That's how close they got to being taken out by the tsunami. Now, imagine if as soon as the water started going out, she was able to say, oh, this is a tsunami, and was able to snap everyone out of that catatonic state. So they didn't stand there staring at the change that was coming. And most of those people ended up dying. This is the situation we're in. Now, I'm not trying to be doomist. I'm trying to be an opportunist here, and I want to help people. Sorry, Gabby?
Yeah, no, that's kind of my point earlier. It's like I feel like there are a lot of people that are in that kind of mesmerized state right now. It's kind of like, to be fair, there's also a lot of people that are not paying attention to AI and everything that's changing at all. But then there's a lot of people that are watching it all and just kind of going, they're freezing because they're like, this is so fascinating. And that fascination and that mesmerization, and that's making them freeze.
Yep. 100%.
But the tidal wave
100%.
is still coming.
Yeah, totally. And if you knew, like if you saw the water going out and you were like, oh, and you instantly knew what that was, and you were able to go and like take your family and put them in the car and drive to higher ground before the water came, you'd like, why wouldn't you? Of course you would do that. Of course you would do that. And so hopefully that this can be seen as this should be a positive thing. This is not trying to be, again, we're not trying to be doomers, because in fact, I'm not a doomer at all. I mean, anyway, let's talk about this slide here, because I'm an apocalyptimist, right? So let's talk about this slide here, because when I unpacked this data, this was just so freaking wild to me. So there was a study done by Chetty, Gruski, Hell, Hendren, Manduka, and Narang called The Fading American Dream, which looked at the probability of a child earning more than their parents on a purchasing power adjusted basis. So not on a nominal basis. So for example, the parents might have earned $50,000 a year, and the kids might have earned $150,000 a year at the age of 30. So they measured the child born in, say, 1984. What was their earning? What was the average earning capability when they turned 30, right? So it was like they measured everyone at the age of 30, and they created a study to then track back and go, okay, in relative purchasing power terms, by the time someone is 30, based on their birth year, what is the probability that they're earning more than their parents? Did I explain that in an easy to understand way?
Yep.
So in 1940, there was a 92% probability that a child born in 1940, that by the time they turned 30, that they were going to be earning more on a purchasing power adjusted basis they'd be earning more than their parents, which is pretty good.
Mm-hmm.
By 1984, that dropped to 50%. So if you were born in 1984, you only had a 50% chance of earning more than your parents, but at the age of 30, earning more than your parents on an on a purchasing power adjusted basis, which is crazy, which is absolutely insane. Basically, like 50% chance that you're actually going to be better off than your parents, which is nuts.
Mm-hmm.
Now, if you extrapolate that forward, so I did some data extrapolation, and extrapolation is not, scientifically sound, but nonetheless, we took the average rate of change from 1940 to 1984, extrapolated it forward. And when you get to a child born in the year 2000, they have roughly a 30% chance of earning more than their parents on a purchasing power adjusted basis by the time they turn 30, right? Which is nuts, which basically means that most likely you're going to be worse off than your parents were at the age of 30, which is, I found this to be just so wild, because that's a clear trend. This is not AI that's caused this. This is an economic construct.
And that's, like you said, 1984. That's like people will still have been operating in the way that they assume that they will have more prosperity than their parents.
Yeah.
Like to now, it's like there's always been this assumption, because that's been our history, is that wealth goes up, prosperity goes up with generations as the world expands. And so a lot of people in this kind of bucket have not been acting in a way that's setting them up as though, okay, I need to really like hustle while I can, because there's this inbuilt belief that it'll be fine. Yeah.
Well, the economic system we live in is not designed in a way that is allowing this to happen. It's certainly not because people are lazy, that's for sure.
Yep.
So if we also take another look, and this is to highlight the change or the relative value of your income versus owning assets. So you'll see the chart here compares the median house price to income ratio by capital city, and it says 1990s to 2024. So just to be clear on the 1990s, because there was several different data sets involved, it was basically 1990s basically means the average between 1993 and 1995, right? Because of the way the data sets were structured. So looked at the average Sydney property price between 1993 and 1995. So it says 1990s, but it's 93 to 95 to be a bit more specific. So in between, we'll just call it mid 90s. Sydney had a 3.5 times house price to income ratio, and now in 2024 it was 13.8 times. In Melbourne, it was 3.2 times. In 2024, in the mid 90s, it was 3.2 times. In 2024, 9.8 times. In Brisbane, in the mid 90s, it was 3 times, and in 2024, it was 8.4 times. In Adelaide, in the mid 90s, it was 3 times. In 2024, it was 9.7 times. In Perth, it was in the mid 90s, it was 3 times, and in 2024, it's 7.3 times. So what that tells you is that asset prices, particularly houses in Australia, are accelerating at a far greater rate than income, right? So that alone should give you enough reason to think, okay, I'm going to need to move faster to get into this asset class because it's accelerating. It's accelerating away. Any comments on this? What do you think about this when you see this? Like, you look at Sydney. What is your gut thought on that? That's nuts, right? Like, because you were born in 1993, right? So, so when you were born, the average house price to income ratio in Sydney was 3.5 times, and so in your lifetime to 2024, it went from 3.5 times to 13.8 times. What's your gut response to that?
There's two parts. My gut is around I was born in 1993, and I think through I was not born in a wealthy family at all, and I think through for my mum to be able to buy a property, it was still a lot of work, but she was able to do that on a single income at that point. And pretty much since then, it's just that's bananas for anyone to even conceptualize doing that these days. But my analytical brain is going to okay, obviously we've been talking a lot on this particular podcast around liquidity and asset prices going up, and the system's designed to push capital into assets like this. And so that's obviously accelerating, but also there's an element, and I think this is where a lot of people, again, kind of try and push it on the government from the wage growth perspective. It's like,
yeah,
wages obviously have not been growing anywhere near the level the asset prices have as well. But it's like both sides of that equation are enforcing that gap, if that makes sense. Like wages.
Yeah.
I don't know if we have any data on like wage growth in the past, like 10 years, but.
Well, let me show you. Can you see this graph here? So I find this graph to be really illustrative of the K shape that we're actually talking about, right? So this is income inequality in Australia from 1961 to 2024. It's an interactive graph, which I always really like. But you can see that from roughly 1978, 1980-ish, thereabouts, there's a fork in the road where the top 10% income share has gone through the roof, right? And the bottom 50% has gone through the floor. So the blue line is the bottom 50% and the red line is the top 10%, right? And so that tells you a lot about wage growth. Now that's not exactly what you're looking for, because you want to actually see like wage growth. And I think maybe perhaps actually I'm not sure if we have specific wage growth stuff in there, but we do have some other interesting points. But yeah, wage growth has not been keeping up. In fact, this is actually going to show it here as well. So if we look at this, and this is wealth and income distribution by quintile from in 2019, 2020. So you can see that the top 20% captured 63% of the wealth, but the top 20% only captured 41% of the income. So that alone tells you there's a gap between income and wealth. If you look at the bottom 20%, they've got less than 1% of all total wealth and 5% of the income. So you can tell from that the income to wealth distribution is falling down. And so you are not going to be able, like, if you want to make progress, you've got to move from the income earning side to the ownership side. Wealth is far more concentrated than income. The top 20% hold 63% of all wealth, and the bottom 20% hold less than 1%. Asset ownership is the dividing line between these 2 points.
Which I think is that's an interesting point to think about. Like, because a lot of people historically, I guess, have really prized income, like from an identity basis. It's like, if I'm earning a lot in income, if I have a lot of cash flow, if my salary is high, like, I'm doing good in terms of my wealth. But it doesn't necessarily mean that if you're not investing that income into assets, right?
Absolutely spot on, right? And so as we move into, because AI is going to, so all of this stuff is not AI dependent. All of this stuff is already happening, right? So ChatGPT didn't get released until 2022. This data here is from 2019, 2020 financial year, right? So all of this is not driven by AI. But guess what AI is going to do? It is going to accelerate this. It's going to accelerate this, because if we go back to productivity versus pay, right? So AI is going to accelerate productivity. And that is not going to translate into higher wages. In fact, it is almost certainly going to translate into either stagnating employment or potentially lower employment. And again, as an apocalyptic optimist, I believe on the other side of this, I do believe we arrive at a state of abundance, but it's going to be chaotic on the way through. So I'm not saying that the world is over, right? But what I am saying is, right now you have an opportunity where you need to think, okay, what is my income potential over the next 5 years, and what am I going to do with that income? Okay, and you need to really think about, like, my advice, by the way, would not be go start a business, because pretty much all businesses are going to be at the threat of disruption or saturation, right? One of the two. So the pathway once upon a time was like, hey, go start a business, build some real wealth, or build some, increase your income, and then go invest in assets. Now I would say, however the hell you're earning money, whatever you're doing right now, just keep doing that. Don't worry about changing, right? Just keep doing that. But then think about how aggressively you can invest, because this productivity divergence is only going to get worse. And just as another little point here. So I literally spun this up just a couple of minutes before we went live. So I wasn't able to infer the residential real estate on a debt adjusted basis. So if you've got a mortgage return on it, but really what this highlights here, nonetheless, this was based off, you can see the source down the bottom for all of the data. So I just didn't have time to kind of go, okay, well, if you bought a property and you use 80% LVR, what are the inferred returns? How does that translate? But I'll give you the punchline. It's going to be shitloads better than shares, right? So if you shares over the last 30 years, the growth of $10,000 over 30 years, assets versus wages 1995 to 2025. So Australian shares, you would have 14.4x your assets or your wealth. You would have grown it from $10,000 to 143,786. It's an average return of 9.3% per annum. If you own residential real estate with a mortgage and you're using leverage, you're going to massively expand on that. So whatever you think, if you think that is good, then just, I don't even know what number, 3, 4, 5 times better than that is sort of roughly how you should be thinking. So Australian residential real estate absolutely smoked. Australian residential real estate purchased, you're buying the right property in the right place at the right time, in line with your own personal portfolio strategy, intelligently using leverage. So all of those caveats applied will absolutely smoke any of the things you see on this screen. The point here is not which asset is better, shares or property, because property absolutely cooks it, right? Totally blows it out of the water. The point here is to look at wage growth versus these other assets to highlight the fact that income can't keep up. So wage growth over the last 30 years has grown by approximately 3.9% per annum. So if you were earning $10,000 salary in 1995, that would have grown to normalized out on if you kept the same job, you would be earning 3.1 times more. You'd be earning $30,893. So there's been 3.1x wage growth, but shares grew 4.6 times faster than wages over the last 30 years. So income can't keep up. Even the highest paid workers can't save their way to asset owner levels of returns. The only path across the chasm is ownership. That's really the only way you can do it. Now, are you going to go start the next Tesla? Almost certainly not. Are you going to go start the next NVIDIA? Almost certainly not. Are you going to go start the next Microsoft? Almost certainly not. You can own parts of those companies though, right? You can actually take your income and you can say, okay, how do I actually own winning ideas and winning opportunities? And that's just in shares. And of course you can do it again, even better in real estate. Let's get through some of these slides, Gabby, and then let's just kind of talk about it. So unless you got some comment to make on the previous slide, by the way.
I wanted to have a bit of a dialogue around, because you're saying like recommending not starting a business, but I'm thinking through there's a lot of noise on social media right now around people learning these AI tools to be able to spin up things that can generate them cash flow. And whether or not they think about that as a business, technically it is a little business, but and I also think through like the example you gave of your friend that you're helping with their business, it's like if you approach it as a lifestyle, like contained income generating thing, and then the purpose is to generate income that you can put into assets. That still sounds like a good idea, right? Or are you saying that that's probably still...
No? Okay, yeah, okay. So, yeah, thanks for challenging the concept because you are right. Okay, you are right. So, I guess let me kind of expand on that. Let me stop sharing my screen for a second, and we'll talk about that idea. So, there is a window of opportunity where you can. Right now, where you can exploit those inefficiencies, right? So if you can find someone who needs something and you can use AI to spin something up, you can capture economic opportunity from that. I guess the broader idea is that the concept of building a business has changed. So once upon a time, you might think about building a business I remember when we started, we were like 40-year plans. We're like, we're going to build this business for the next 40 years, we're going to build a business that's going to outlast us. We wanted to build a century business, like all of these big ideas to build a company that would live longer than us, and, the idea of building a business that is going to last more than 3 to 5 years, I think is kind of misplaced. And the fact of the matter is most businesses fail. And that's not just that's not an arbitrary statistic. Like most businesses don't make it. It's very hard to actually get it. It's one thing to come up with a solution. It's another thing to work out how to attract clients and revenue and build systems and all of that kind of stuff. So just because you have an idea doesn't mean that, your marketing, all that kind of stuff. Just because you have an idea doesn't mean you have a business. So most people who try and start a business fail. And so if you're in a position right now where you have a good job and a good income and you think, I'm going to go start a business, and there's, let's say, 3 to 5 years to make the greatest economic impact on yourself and your family, you would really need to be very considerate of the risk associated with that and the fact that it might not work, right? And so if you only had 5 years left and then you spent 3 years on that trying to build a business that didn't work and didn't make any money, and then you went, okay, now I've only got 2 years left, are you going to be satisfied that you made the right choice? I'm not sure. I think there's a big risk in that. And most people don't, even though AI may enable the capabilities to go and build a business, most people don't have the necessary attributes to be a successful entrepreneur. And that's not to be, de minimis to anybody's capabilities. It's just the fact of the matter is most people don't. Just like there's lots of things that people are good at and not good at, and have the natural aptitudes for, and it's fine. I don't think it's a status thing. It's just being practical. Also, lots of business owners suck at doing heaps of stuff. That's why they need to get a good team around them. I'm one of those people. I suck at lots and lots and lots of stuff. And without having an amazing team around us and around me, I mean, like any success that Dashlight's had rests on the shoulders of the amazing team we've got. That's for sure.
Yep.
And so I think that's really, you need to be really considerate around that idea. And it takes time to build a business, and you've got to develop the skills. And like, are you going to be able to do that in an increasingly accelerating world? I'm not sure. Now, that doesn't mean that you can't come up with a good idea and monetize it. And if you do that, that's another way to generate income. And you can then turn that push that income into assets. I think that's a great idea. But sort of what you're pointing out more, Gabi, is like side hustles and kind of things like that, as opposed to like burn the boats, go all in, try and build something, right? And I think it's different. So yeah, please don't let me stifle your ambition. If you've come up with if you can go build something and you can see that people need it, and you can think about a way to monetize that, and it's morally and ethically sound, just know that it's probably not going to last. Like Xero, for example, the accounting software, a multi-billion-dollar company. You can spin up your own in-house accounting software solution now using AI that'll cost you a fraction of what Xero would cost, right? So and that's not to say, by the way, I don't, in many cases, this whole idea that AI is going to eat all software, I don't think is true. So I'm not in that camp either. But you have to also recognize that the capabilities have changed significantly. Even as, and we know this because this is how we're working internally inside Dashdot. There are things that we are doing now which previously would have taken weeks or months to do, and we're doing them in an afternoon. And so, let's say you identify something that people need, and you can build it. If you can build it quickly, that means somebody else can also build it quickly. So you would just have to recognize that the opportunity set is shorter. And it's almost certainly not, it's going to be a bit more of a flash in the pan. And if you can do that, if you can go into it with that, rather than some like, I found an idea, now I'm going to build an empire, which is probably not true, right? Then great, absolutely. Like capture the opportunity, but just recognize that it's going to be, it's probably not going to have as much runway as it may have in the past. Does that kind of clarify that point a little?
It does. It does make me sad on a personal level. There's a lot about what's going on that's like I get upset about. But as an entrepreneur and someone who, like you said, when we started the business, it's like you've got these big aspirations and visions, and you can create the 40-year plan, and you got the vision of like the team and what that's going to look like. Even like there's a company I follow in a completely different industry, and like they've just, I don't know if they bought it, but they've just set up like a new office, and it's like a really cool office. I was like, I remember the days when like that felt like a real dream. Like that felt like something. I was like, okay, one day we'll get to a size where we can like do this in-person thing. We can have a really cool office, have a really cool like in-person culture, and like that. Unfortunately, I don't think that's going to be the reality for many businesses for many more years in terms of like that that romantic vision of what maybe entrepreneurs had in the like 90s and 2000s.
Yeah.
Of like build that startup vibe and do all the in-person stuff.
Sure. But, I bet you that everyone who worked at the Yellow Pages, really thought that that was the epitome of working in a really great business, right? Like, like they went to the office, they would have had workplace relationships. Yeah, cool. And then Google came along and you didn't need the Yellow Pages anymore, right? So these kind of things, these kind of changes happen all the time. Like this is a constantly changing environment. And the reality of the situation is this stuff doesn't have to go away in permanence. It just needs to change its form. It just needs to change its form factor. So let's just say, for example, that you invested in assets, right? And built a tremendous amount of wealth. And let's say your wealth was compounding because you'd invested well and you'd set up a really good wealth flywheel. And so as the productivity gains distributed through society, you were capturing a decent portion of those. And so you were becoming wealthier over time. And let's say you had a desire to create a business because of the creative pursuit, because most business is a creative act at the end of the day. It's creative problem solving and imagining something and turning it into reality. It's not really any different from painting. It's just got a few more a few more cogs in the machine, right? So you may do that, but you may change the rationale of like how you would measure success. You may actually have the freedom to build a business to say, I'm going to build this because I think it's awesome. Not, I'm going to build this and I have to make sure it creates a certain amount of profit. Otherwise, if it doesn't, I might go broke. What about the financial risk? Like, just imagine for a moment, if you had $100 million of cash sitting in the bank, right? Or actually, let's put that in a different way. Let's say you had $100 million right now that you could dump into assets that you were confident were going to compound at a rate of 20 to 40% a year for the next 10 years. And then you also had an amazing idea. Let's just say you wanted to create a restaurant, right? And you would just like really passionately wanted to create this beautiful restaurant. Or, I would love to create a gym and wellness center. Awesome. And let's say you could do that. And the only prerequisite was that it washed its own face. It paid all of its employees well. And it washed its own face. And maybe you could even give the employees a share, maybe not of the equity, but maybe of the revenue. And so everyone had a place in that business. Maybe you could do that. Maybe the construct changes. And I think that one of the problems we have as a species is we're really, 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 really terrible at imagining things being very, very different. And so I think, I don't think that the creative act of wanting to create solutions, elegant solutions to problems, or to create things because you think that they would be great, I don't think that's going to go away. I think it's actually going to be enabled. But we might just need to reframe what our expectation is from that. And I think that if you want to be in a position to be able to do that kind of stuff, then let's just say, let's take this in a slightly different tangent. Let's say you're listening to all this and you're like, if you got kids in the car, block their ears. Let's say you're listening to all this and you're like, fuck this shit, I'm out. I don't want to do this. I don't want to play this game, right? I don't want to play this game. I'm just going to bail. I'm going to go and get a farm and grow all my own veggies and live off the land. I'm not going to play this game anymore. Guess what you need? You need enough wealth to be able to go and buy the bloody farm, right? So you can build wealth so that you don't have to play the game. You can opt out. You can opt out. You don't have to go into sort of some kind of like techno future. I mean, to the degree that there's going to be drones and stuff flying around, who knows? But you have the ability to change your relationship with the game if you change your wealth profile. That is why this is important. If you don't build wealth, you don't have options.
Yeah. And
so, like take yourself and myself. We want to do creative stuff all the time for the purpose of doing it creatively. So, for those of you who are listening, Gabby and I, just before Gabby had a leg incident, we were getting really into photography. We had this amazing idea that imagine if we could, everywhere that we traveled, we'd do a lot of photography, and then we'd create photo books, which used to be like, coffee table books. They used to be like a really kind of big feature. And I think there's a beautiful I love photo books, right? We could create photo books, and then what we could do is we could sell them, but 100% of the profits could go to a charity of whatever city or whatever location we had taking the photos in. So let's say we go to, I don't know, Hong Kong or whatever. We build a photo book around Hong Kong. Then we could sell that book, and 100% of the profits could go to a charity based in Hong Kong. That's an example of like a business idea. Oh, we could go do this thing, and we could take this thing, and we could monetize it because people are going to want it. And none of that is really designed for our own personal economic gain, because we have assets, we have other stuff. We don't need that. So imagine if we could give that to other people. And so I think you actually create more of that capability, but you have to get on the right side of the ledger. And this is, I think, the bit that people are missing, is that this is speeding up. And so I think anyway.
I actually care about this a lot, because I care about, there's a lot of creative people in my life, and like I'm very much a creative person. You're a creative as well. But I've talked to so many people over the years that are like wanting to start their businesses, and then in some kind of creative passion driven thing, and they're trying to like bolt the money into it. And I just think it's so much easier to like learn or create some kind of wealth system for yourself separately that takes care of the money side of things, so that you can do the passion, the creative thing, without having to try and monetize it.
Yeah.
Because I see, because the supply of people that are trying to do whatever it is that you're creatively passionate about, that will continue to go up, particularly as, people get more and more into social media. There's more AI that people are using to create stuff, like the supply of stuff, meaning that, and there's only so much demand. And so you're constantly going to need to keep competing for the same resources. And so it's going to get more and more stressful. And you see that already. It's like people that have this business that they have to monetize because that's their income, because that's what the previous way of doing things was. And now they're at a point where like they have to take actions just so they can make money, because that's the system that they had. But they're actually like, I wish I could just like take photos and not give a shit about money. I wish I could just, make art, make videos, and not worry about what the algorithm thinks, and like do all of this stuff. But they can't, because they haven't gone down the path of building their own wealth and learning about that and taking that seriously.
Yeah, I was actually thinking about this exact topic the other day. I was riding back from the gym, and I was thinking about that exact thing. The advice that we used to get was, turn your passion into your job and you'll never work a day in your life. Well, that's not true, actually. If your passion is photography, and then all of a sudden your economic survival is reliant on you monetizing that product in a certain way, then all of a sudden that becomes a job, not a joy. And like to the extent that you should, preferentially find work that you enjoy doing with people that you like. You want to enjoy your work. I don't think I think you should find stuff that you enjoy, right?
Yeah.
But also you don't want the thing that you're passionate about to have to become forced because of your personal economics. And I think it's a really important distinction. You want to be able to do that stuff because you love it, not because you have to. And it's okay to do things that you don't want to do from time to time. Like that's fine. I think struggle is a really underappreciated aspect of life. I think it's really good to do hard things and to do stuff that makes you feel uncomfortable, and to do stuff that you might not necessarily wake up and go, geez, I really want to do that. I mean, I heard a story about David Goggins the other day, where some days he'll sit and stare at his shoes for 30 minutes before he puts them on. Everyone thinks he just runs. But some days he struggles too. Like he doesn't like to do the thing. That's fine. You don't have to like to do everything all the time. This is not some fanciful, gingerbread house land where we all just cruise around, floating on clouds of fairy floss. Like we've got to go and get shit done sometimes. That's fine. That's okay. But there's a difference between, I think we have an opportunity to recognize that if we can create more wealth prosperity, then we can cushion ourselves from the rigors of income production, which income production is not keeping up. And so once upon a time, perhaps you could turn photography, or you could be an artist that could monetize their art and produce enough income that you could create a satisfactory life. But because your income capability versus the cost of living has gone down, i.e., in relative terms, your income doesn't buy the income you produce does not buy you as much stuff. You've gotten poorer and poorer as an artist or as a creative, and therefore you have to work harder and harder. And therefore, the thing you got to do because you enjoyed doing it becomes something you have to do in order to just survive. And then the joy gets taken out of it, and then the thing you loved becomes the thing you hate. And that's not good. right? So I think that's different from work, right? You know what you're signing up to when you're signing up to work. You're like, yeah, great. Okay, here's something that I'm interested in enough that I can show up and do it for a certain amount of hours a week and get paid a certain amount of money, and I'm satisfied with that arrangement. And then in my spare time, I'm going to go do other things, So and that's cool. So I don't think that where we're going destroys creativity. I think it just changes the relationship between how we need to think about the opportunity set. And again, going back to the point I made earlier, like, people really struggle to think about things that haven't existed in a certain way before. You and I were talking the other day about AI, like, what's the form factor of AI? Because everyone's been sort of trying to work it out. Is it wearable glasses, or are we going to have a little pendant, or are we going to have something like that? And I was thinking about the fact that the almost certainly, in my point of view, the end form state for AI is formless. And that's a really hard thing for people to grasp. What do you mean? What I mean is AI won't have a form. It'll be the most transformative technology we've ever created, and it won't have a specific form. It'll be formless, like consciousness. Consciousness is profound. So anyway, back to the point. This trend. Let me just quickly whip through another couple of slides, and then let's kind of recap on a couple of things, because I went to the effort of getting these slides together, so I want to kind of show them off, right? So sure. Let me share my screen again. Okay, so this is called the Gini coefficient. We're not going to spend much time here because it's a little bit wonky, but effectively, wealth has increased much faster than income over time. What you can see here is this is the cumulative real wage growth by income group in the US from 1979 to 2023. And you can see that the top 1% had 182% real wage growth since 1979, and the bottom 10% had 18% real wage growth. So the top 1% gained 10 times more income. This is wage growth, income, than the bottom 10%. And also, this is the thing that we're sort of touching on here, is AI is going to embed this and make this a lot harder to change. But what's interesting is advanced economies are actually much more prone to being affected by this than low income or developing economies. And I think this is really, really interesting, because you and I live in Thailand, and we look around the street. We've had this conversation so many times. You walk down the street here and you're like, okay, that massage place is not dodgy massage place. That's not going to be disrupted by AI. That fruit vendor is not necessarily going to be disrupted by AI. You walk around and okay, like, is this really going to change that much? Like, do people here really care? You think about like a nomadic Berber tribe in the Western Sahara. Do they care that Opus 4.6 got released last week? No, they don't care. They care about, did it rain? Where am I going to move my cattle? Who are my kids going to marry? It's very kind of more simplistic stuff. And so the degree to which you're embroiled in an advanced economy is also the degree to which there's going to be increasing disruption as well. And I think this is interesting because it kind of goes back to the point that I was making earlier around the opting out aspect of it. Now, there was a lot of news recently around like a top AI safety researcher or something like that from Anthropic quit Anthropic. So the headline makes you go, oh my God, does that mean Anthropic's dangerous? No. It was someone who worked deeply enough in that organization to recognize how much change was coming and quit to go back to England and write poetry. That's why they left. They said, okay, this is going to go so much faster than people realize. I need to go and connect with creativity. I need to go and connect with creativity. I'm going to go write poetry. That's why he left. Right. And so you have the ability to kind of shape the future you want in spite of the change that is coming, if you can get on the right side of the wealth equation. I just want to point this out as well. More inequality equals less mobility. And this kind of actually goes, this is called the Great Gatsby curve, which I think is really, really interesting. The Great Gatsby curve basically shows that inequality versus the greater the level of income inequality, the greater or the lower level of intergenerational upward mobility, right? And so the reason that this is important is if we go back to the first slide here, productivity versus pay. So productivity is going to be rapidly increased through the application of AI, but that productivity is not going to flow through to wage growth. And so what we're going to see is a greater level of income inequality, which is then therefore going to lead to a lower degree of intergenerational upward mobility. And this is a problem. This also goes back to the point about the advanced economies and low-income economies and emerging markets. Because that inequality exists, that income inequality exists already between those countries, developing countries or underdeveloped countries or emerging countries or poorer countries, if you just want to put it that way, are actually going to find it much, much harder to change their to develop wealth and to progress as well, because they are affected by the same Great Gatsby curve as well. And so the I guess the punchline of all of this is that things are about to they're about to move much faster. How do I stop sharing? Things are about to move much, much faster. And so, we need to be present and aware of that. And I've spoken about this before, but there are plenty of people who've come to Dashdot who've been sitting there ready, willing, and able to buy properties for like 2 years, but they just haven't gotten off their ass and actually taken action. Well, the windows are going to close. I remember back in 2019 when we started Dashdot, we were buying properties for like 200K, thereabouts, low 200s, stuff like that. Realistically, we're buying properties that are north of 500 now. So that's more than doubled in 7 years in what we're able to buy for clients. And that's only going to get worse. And I think this is again, not the purpose of this kind of topic is not to be fatalistic or doomerist but it's actually like, the K shape in the economy, it's real. And it's only going to get, so let me share my screen again real quick. So I'll bring this image up. The K shape in the economy is real, and it's only going to keep going in the same direction that it has been going for the last 50 years. The challenge is the wider that gap gets, the harder the chasm is to cross. And then AI is being inserted into the middle of that chasm, which is going to make it even more challenging to cross. And really the only way that you can get from one side to the other is asset ownership. You're not going to get there by saving your way to wealth. You're not going to get there through trying to grow your income. You're going to get there through investing. And so my advice generally is, maximize your opportunity to earn, but also now's not the time to start taking uncalculated risks in terms of income. What you need to do is you need to work out how quickly can you invest in assets. They're going to move you onto the right side of the ledger. Because if you can get onto the right side of the ledger, then you can create prosperity for your family and save yourself and the people you care about from the supersonic tsunami that is coming towards us in the form of AI, which, as an apocalyptimist, I actually think net overall, long term, I think this is all going to be bloody amazing. But it's going to be very turbulent on the way through. And so you have an opportunity to build a lifeboat. That lifeboat you're not going to have that opportunity to build that lifeboat forever. And so you need to take action now if you really want to get on the right side of change. What do you think, Gabby?
What I think is, I'm wondering, obviously we talk a lot about wealth building and, this whole conversation is around making sure you're getting on the right side while you still can. Why is wealth even important? Like why is that something that people should be prioritizing? Because RJ, I see your question come through in the chat, but it's dovetailing with that. It's just the concept of like, okay, if I'm someone that hasn't traditionally really cared about money, like why should I bother putting my time and effort and focus into building wealth at all?
It is such a good question. It is such a good question because if the economic system we're in was not broken, you would not need to worry about this at all. We would not need to have this conversation. So if your money transported your economic energy through time and space in a way that didn't devalue over time, you wouldn't need to worry about this at all. You could literally, and there's been plenty of people who did it, would go and like work for, I don't know, a couple of weeks, save up some money, and let's just do some kind of like spot work or whatever, and then go camp up in the hills and, do whatever. You don't have to live that kind of life either. But the point there is the only reason you need to do this is because the system is designed to actually, and I don't mean, when I say designed, it's not tinfoil hat, like malicious, the reptilian overlords have designed something to keep us poor or whatever. We have a poorly designed economic system, but I don't think it's malicious. I think it's I think it's stupid. But the reality is we're in it. And if you don't do anything about building wealth, what is going to happen is the cost of living is going to go up, and your capability to be able to afford the things that you want or need is going to go down, because the cost of living is going to go up, and your capability to buy the stuff that you want or need is not going to keep up with that rate of change. Now, let's say we get to the other side of this, AI economic singularity type scenario, and there's abundance everywhere. Then actually, money might not even have any purpose or meaning at all, full stop. The question is not what happens then. The question is, how do you get to the other side, and what does that feel like for you in the process? So if we went back in time to, or if we studied history, and if we looked at situations where, the monetary system wasn't broken and money wasn't devalued and debased. So if you look at, for example, the florin, I know we've used examples plenty of times on this podcast. But if you look at the florin in Florence, that was not debased for like 300 or 400 years. So the economic value of a florin stayed the same for hundreds of years, which meant that a baker could be a baker and could save their way to wealth, and they could afford to buy a home and put their kids through school. And fair enough, they didn't have the same technological advances. So that didn't mean that all of a sudden they could build a spaceship and go to Mars, because they didn't have the same technological advances. But they had enough. They actually had enough to be able to then contribute to their community, to be able to contribute to their church, if that's what they wanted to do, to be able to support other people, to sponsor the arts. Like this is what happens when you have a system, an economic system that is not broken. So why is it important? The reason it's important to build wealth is because that is not the system we're in. We're in a system where it is harder to get ahead for you today than it was for your parents. Your parents, if they're anything like my parents, or even a little bit older, through the fruits of their labor, were able to provide a good home, good education, good food, and a good life for their family, possibly off a single income. That is not possible today because of the economic situation we're in. And so your purchasing power has gone down. Your income relative to the cost of goods has gone down, and it is harder to afford the basic things in life that you would expect out of a good quality life. So then your only option is to do something about it. You cannot, or it is unlikely, let me put it that way. It's not like to say that you can't, because obviously some people do, but statistically speaking, the vast majority of individuals will not achieve economic upward mobility, i.e., to create a better life for their family than they had growing up, which is what most people want. They actually want to be able to see economic progress in their life through they want to be able to expend effort and receive reward for that, and that reward should show up in being able to create a better quality of life for themselves or their family than they had experienced in the past. And I think that's a natural progress for anyone to want to have, to be able to learn from the past and make things better in the future. Statistically speaking, the vast majority, 95 to 99% of people, will not achieve that through income growth. It won't happen. And a lot of the stuff we showed is pointing to that. If you're reliant on income growth and savings to achieve that goal, you are going to find yourself wanting in the not too distant future. And so if you have a desire for your economic future to be the same or better than it is today, in real terms, so even to maintain your current standard of living in the future, then you must grow your personal wealth faster than your income is going to grow in order to try and keep up. If you do nothing, then you will get left behind. The natural state of the universe is entropy. And so what is going to happen is your economic situation will decay. Now, I don't like that. So let's be very clear. I don't like that. I think it's absolutely shit that we have that economic system. I think it's crap. I think the fact that people have to invest to build wealth just to get ahead is, I think it's a devastating shame for our society. I really, really do. Because I think that we would have more creativity, more prosperity, more abundance, more joy, more happiness if we were able to have a more economically sound system where our money didn't lose value over time. But that's not the system we're in. So we can bitch and moan about it. Yep. We can wave our fist at the sky and shout at the clouds and, complain, but it's not going to change anything. So you can either bitch and moan about it, or you can do something about it. Because ultimately, at the end of the day, your financial prosperity, in fact, your life in the context of your ability to live it to its fullest potential in whatever that means for you is in your hands. It's in nobody else's hands. You can't expect somebody else to come along and fix your situation for you. There's only one person who's going to change it, and that's you. And so, yeah, I mean, you don't have to build wealth if you don't want, but see how that's going to work out for you in a few years. And you don't even have to imagine that hard. Actually, just think about how much harder. Just think about everything you've done over the last. If you are someone who has worked really hard over the last 5 or 10 years to progress yourself professionally and economically, and you still don't feel like you're that far ahead, or if you're someone who has not done that and you feel like you're further behind, then all you need to do is look at the past to know what's going to happen in the future, but it's going to happen faster and greater. That's what's happening. It's an exponential curve. And humans absolutely suck at understanding exponents.
Mm-hmm.
You know, there's I may get this slightly wrong, but and so don't roast me in the comments if I get this slightly wrong, but I'm going from memory here. But if you can only fold a piece of paper 7 times, right? Functionally, it only folds 7 times. But if you could fold it 50 times, do you know how far that would reach, Gabby?
To the moon.
To the sun.
To the sun.
Yeah. And so now that's obviously you can't actually fold it that many times. But if you could, I'm pretty sure it's 50 folds to get to the sun. I could be wrong about that. So don't roast me if it's 50 or 40. It's not a very large number though. It's a very small number.
Yeah.
So 50 might be overstating the number. And so
Crazy.
The thing is that the step changes, you know, fold a piece of paper once, it's very small. Fold it from fold 36 to fold 37. That's a huge leap. And imagine fold 40. You know, people don't understand exponents, and this is the thing. And again, do I believe that we get to the other side of all of this change and we have a better future? I mean, look, there's definitely some possibility that we don't, for sure. So let's be realistic about it. Maybe it's just because I prefer to, but I believe that we will end up in a better state. I just don't know that we know what that better state is. Right? It's very hard for us to imagine a future that we don't understand.
Mm-hmm.
But I'll take the point of view that it's probably going to be better, because if you look at the past, extrapolate that into the future, you would argue that our standard of living today is much better than it was in medieval times, and much better than it was in Babylonian times or something like that, right? So you can easily extrapolate that forward, but it might not be how it looks and how we think about it today. The question is not what does the future look like? The question is how are you going to get there? If you have to pass through an economic singularity, what is the shape and size and structure of the boat that you're going to use to sail across that sea? And that's going to be dictated by how much wealth you can build. Are you going to be trying to sail across the sea of the singularity in a paper ship full of hopes and dreams, or are you going to build something robust that's going to carry you and your family and the people you care about to the other side, so you can enjoy the abundance that we'll see? That's the big question. That's the big question, because not everyone is going to have a good time through all of this, but that's a choice.
Mm-hmm. Cool.
Sweet. Okay, so I'll just quickly recap. All right, so there's three layers to this core idea. So number one, the chasm is real and widening. So the economy's always had rich and poor people, but it's always been flexible. Upward mobility has been implicitly able to be done. But AI is hardening the divide, and it's turning a flexible spectrum into a structural chasm. So that's the first one. And you've got a shrinking window to get from one side to the other. Layer number two is that asset ownership is the only real bridge. Income and savings alone. I'm reading notes here, by the way. That's why I sound like I'm reading notes. Income and savings alone will not get you across the chasm. Wages stagnate, savings erode against inflation, but asset values compounded. So the only meaningful way to achieve upward mobility is to become an asset owner. Property, equities, stuff like that. Australian residential real estate, bought, if you buy the right property in the right place at the right time, in line with your own actual personally developed strategy and portfolio strategy, using leverage intelligently, is the fastest, best risk-adjusted way to get to your goals. And the chasm isn't really between high income earners and low income earners. It's between owners and non-owners. That's actually the bridge. It's between the asset owner class and the consumer class or the income class. And AI is going to make is going to level the playing field for everybody to be able to exploit the inefficiencies that are found in all markets in all places, which means that those inefficiencies will be less valuable. And so your opportunity to exploit those inefficiencies for economic prosperity is being severely diminished. So there's really only a few years left in order for you to better make a significant dent on the wealth side of the ledger. So hopefully people take this as a bit of a call to action, and rather than sort of like a, fearful read, because I think if you know the situation you're in, you can do something about it. That's the big point. And you have an opportunity right now to do something about it and to get on the right side of the ledger. And Australian residential real estate is, I'll say it again, in my opinion, the best risk-adjusted return. Because if you look at equities at the moment, we invest in equities and Bitcoin and all that kind of stuff. But I mean, it's very hard to know what's going to happen with businesses and equities in the age of AI. It's very hard to know. I'm very confident that Australian residential real estate is not going to be disrupted in the same way, right? So, so you have an opportunity now, and hopefully you can see that opportunity and you use this as motivation to take action.
Yep, awesome.
Cool. All right. Thanks for joining us, guys. RJ, great to have you in the chat there. If you've enjoyed this episode, let us know in the chat. If you think that we are full of hogwash, let us know in the comments on YouTube as well. That'd be great. Otherwise, we will see you next time. Thanks for joining us. It's been fun having you back, Gabby.
Yeah. Bye.
See ya.